and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, April 27th, 2022, and I'm pre-recording this Trading Places Live for Thursday, April 28th. Currently, futures are up. We are seeing NAS futures especially up a little bit more than 1% after Facebook surprised to the upside. We got a nice reaction to the Facebook earnings, or Meta platforms if you prefer. Dow futures up not nearly as much, only 19 points. S&P 500 futures up 23.5. So on a relative basis, NAS futures certainly looking best at this point in time, but we do have the overnight hours to see what transpires. Also in the morning, we've got the Q1 GDP out, so the initial reading. And that's expected to come in at 1.1%, down sharply from the 6.9% from the last quarter. So there are still some obstacles as we head toward the opening bell tomorrow morning, but at least for now, it does look like we've got some pretty good futures. We're going to get into the action from Wednesday here in just a minute, but let me first go through the agenda with you. So we will start off with the daily market recap. Then we'll get into talking technically. Chart breakdown is going to show you a few industry groups that have been struggling of late. Certainly look like they're based on the way they look right now anyway, they look like they could go down a little bit further. Three you must see will follow earnings spotlight. So we'll take a look at Facebook and a couple other earnings reports in that earnings spotlight segment. Then we'll wrap up with the three you must see. Before we get into any of that though, let's go over to earningsbeats.com. For those of you who are new to Earnings Beats, just go to earningsbeats.com. Scroll down. We have a free newsletter. Love to have you join. This is a 3 times a week newsletter published Mondays, Wednesdays, and Fridays. All it takes is a name, email address, hit that subscribe button. We'd love to have you. It is a free newsletter, no credit card required, and you can unsubscribe at any time. We do have free events from time to time. Anybody who is part of our Earnings Beats Digest will get room instructions to all of our free events. So that's another side benefit for being a member or being a subscriber to our free newsletter. All right, let's move on. Let's take a look at what happened on Wednesday. Dow Jones Industrial Average finished up 62 points. S&P 500 was up nearly 9 points. Nasdaq down 2 points. Not bad after going down 500 the day before, but still not very good. Not a whole lot of a bounce there. Mid caps finished up a fraction and small caps down 4.5. So really action was all over the place, but it was fairly close to the center line by the end of the day. From a sector perspective, technology up 1.5%, materials up nearly 1.5%, energy up nearly 1.5%. After that, though, things tailed off. Industrials up 1/3%. And then on the far end of the spectrum, we had communication services down about 2.25%. Big problem there on the internet space with Google or Alphabet. They came up short of their earnings estimate. Stock was down. And so the whole group was down in sympathy there. All right, let's move on to the 10-year Treasury yield, where we saw the yields rising on Wednesday. The 10-year Treasury yield finished at 2.82%. That was up nearly 5 basis points from where we were the previous day. And of course, as I mentioned, we have the GDP. We got some other economic reports coming out as well. March personal income and personal spending will both be out. Well, actually, no. Let me back up. That's on Friday. So for tomorrow, for Thursday, we have the Q1 GDP, which I mentioned was expected to rise. We're supposed to show 1.1%. Q4 was 6.9%. So obviously a sharp slowdown there. Initial jobless claims also out tomorrow morning. Last week, 184,000. We're expecting that to drop to 181,000. And then on Friday, I was getting a little ahead of myself there. Friday, March personal income and personal spending will be due out. The personal income number expected to drop a little bit from February. February rose 0.5%. We're expecting that to slow to 0.4%. The personal spending in February was only 0.2%, and we're expecting that to actually increase to 0.6%. Also on Friday, the April Chicago PMI, March was 62.9. We're expecting April to drop down to 61.3. And then also on Friday, the final April consumer sentiment number. Prelim earlier this month was 65.7. We're looking for that to drop slightly to 65.6. So lots of economic reports out at the end of the week. And of course, we got a lot of earnings reports coming out. On Thursday after the close, both Apple and Amazon will be reporting. So this has been a big week for earnings. We've seen some mixed numbers, but we're going to finish it off with a bang with Apple and Amazon. All right, moving on to talking technically. Wanted to go through the major indices with you and just kind of walk you through. We've seen a lot of selling of late, and we're getting a little mixture in terms of breakdowns versus not quite breakdowns. So here on the Dow Jones, you can see we did get down to about 33,250. That was the close on Tuesday. Wednesday, we did manage to stay mostly in positive territory, but the recent low and the low we need to watch was the March close down at about 32,600. Let me give you the exact number there. Might be a little above that. Finished at 32,632. So that's the number you want to watch. Still got about 600 points, 650 points down to that level. So I think right now the Dow's still okay, although you can see the last 5-6 trading days have not been very good. Then we've got the S&P 500. So the S&P 500 on a closing basis closed in March at 4170. That was on March 8th. And then March 14th, 4173. We did have an open that was at 4155 back on February 24th. So those are going to be the areas, and we're right down up against it. I mean, the S&P 500 finished almost right on that support, finishing at 4183. Intraday, we got down as low as 4162. So we were right there, right in the mix with those keys, with that key support level on the triple bottom right here. But we did manage to hold it. So looking pretty good on the S&P 500 so far. Then there's the Nasdaq. So the Nasdaq actually closed a bit below this double bottom. We had an open of 12,587. That was back on February 24th. Then we came down to 12,581 on the close on March 14th. Well, the last 2 days, we've seen closes now of 12,490 and 12,488. So both of those came in below the prior lows. So we do have breakdowns, even though they were just slight. We could see this impulsive selling really begin to accelerate at any point. So it was good that Facebook came in after hours with pretty good numbers, and they are up after hours. Would not have liked the alternative, that's for sure. Mid caps, the S&P 400 mid cap index, you can see also challenging this area of support from back in January, February, and March. Intraday, we've been down below 2,500, but we have not closed below 2,500. So that would certainly be a round number to watch in the near term. And then with the small caps, we did break down. So here's the rundown. We've got the Nasdaq, which is barely broken down. You've got the small cap index, which definitively has broken down. Then you've got mid caps and the S&P, which are both sitting almost right on support. And then you've got the Dow Jones, which is still got a little bit of room to the downside before it reaches support. So all 5 of the major indices are going to be worth watching here in the very near term. Any kind of further weakness to the downside, and we could see all these indices breaking down simultaneously, which would not be good. All right, let's take a look at chart breakdowns. So chart breakdowns. Well, I mean, the first one I wanted to give you was, this is just a relationship, intermarket relationship between growth stocks, the large cap growth stocks, and large cap value. I mean, if you're bullish and you're thinking this support level is going to hold, this is one chart that I would argue against that. Because normally, if a market's bottoming, we would normally see money rotating toward the more aggressive areas before you get that market bottom, or as you're getting that market bottom. That is not what we're seeing here. you can see large cap growth versus value, that relative ratio has actually broken down, which tells us that growth stocks continue not only to underperform value, but to accelerate that underperformance to the downside. And that is not a good look at all. Let me go ahead and bring up the mid cap versus mid cap growth versus mid cap value. And you can see slight breakdown here as well. So that same relationship, growth versus value, breaking to a new low at the mid cap level. And then we go in here and let's do the same thing here, bring this up. Growth, this is small cap growth versus small cap value. And this also has broken to a new low. How about XLY, XLP? This is another chart breakdown. This is not what we normally see at a market bottom. Again, I mean, the market can do whatever it wants. Can it bottom? Could it be bottoming here? Did it already bottom? It's very possible. I just don't think it's likely. And from a technical perspective, I like to deal in probabilities. We can't deal in guarantees. I wish we could, but we can deal in probabilities. And my experience, when you're getting a new breakdown in this XLY, XLP, that is not a good look on the chart. It's just telling me Wall Street is not moving into consumer discretionary at this point. And if Wall Street's not moving in there, we shouldn't either. Money continues to rotate to defense. And I think that's an important theme to take away from all of this. The large cap growth versus value. Another one is IWF, IWD. And what are we doing here? We're breaking down. So those are 5 important relative charts that are all breaking down. They've all gone to new lows. You know, could it be that we're bottoming here and we're going to turn right back up and take off? It's possible, but I just don't think it's likely. I think it's more probable that we have further downside ahead in our major indices. So I would approach any kind of strength, short-term strength, with a lot of caution. And we are getting a nice rally. You know, I mentioned the futures were up. Maybe we get a nice push. Maybe we can get back to the 20-day EMA. Beyond that, I would really question whether we get much beyond that. I don't even know if we get up there, but at least it looks like maybe we'll get off to a good start on Thursday morning. Other breakdowns that I wanted to go over, and these are industry groups. Let's start with the internet stocks. So I brought up a 2-year chart, and I brought this up on a relative basis, because if you look at the absolute basis up here, the absolute price action on the internet stocks, you can see that we've broken down below the February and March lows. So it's not a very good look. PPO looks horrible. So this doesn't look like a very good chart. But when you look back over the last couple of years, you can see the absolute price action is still well above many of the lows that we saw back in 2020. But on a relative basis, this has been such steep selling that we are now at a 2-year low, all the way back down, testing the area that we saw back in April of 2020. So not a good look at all for internet stocks right now. Within the consumer discretionary area, here's gambling stocks. So gambling stocks have been downtrending since March of 2021. So this is nothing new, but you can see that the lows that we're experiencing now are still above the lows that we saw from May of 2020. But on a relative basis, this selling has been pretty steep, and we've taken out multi-year relative lows on the gambling index. How about specialty retail? Well, specialty retail obviously been breaking down, just recently breaking below the February low. Look at the relative weakness. I mean, just absolutely awful versus the S&P 500. So this is another industry group struggling. How about investment services? So investment services, we've got the low here, taking out the low from March, taking out the low from September of last year, and even taking out the lows from June and July of 2021. So we have moved now to a 52-week low, or right about a 52-week low. It was right at the end of April that we were just below the 1700 level. And here we are at 1729. So we're pretty darn close to a 52-week low on investment services. And on a relative basis, we're trying to hang on to this April 2021 low and the July 2021 low. We did go slightly below it. One more move to the downside here, and I think we've got pretty significant relative breakdown in addition to absolute breakdown. Also within the financials, we've got asset managers. Check this out. So here was a low back in January. We bounced, put in another low in February and March, bounce, and now here we are in April putting in another absolute price low. On a relative basis, getting close to the low we had back in September of 2020. All right, the last one I wanted to show you what is delivery services. The reason I'm doing this, you know, I went and I looked at internet, which is in communication services, two groups, gambling and specialty retail, both from the consumer discretionary area, then two financials. Now we got an industrial. I could show you semiconductors and software in the technology area. My point here is we're getting breakdowns in all of the key areas of the market, the aggressive areas of the market, and that is not good. So here's delivery services. There was the low right at about 1400 at the beginning of October of 2021. We did go below that here over the last couple of days, below 1400, but we've been holding on the closing basis, or at least trying to. We did so today. Now, yesterday on Tuesday, we actually closed a little bit below, and that was the lowest level we had seen since back in March of 2021. So trading below the 20-day moving average, which is below the 50, and we continue to drift lower. And look at the relative weakness. We just hit a level we had not seen in probably about 20 months. So these are, you know, industry groups that are just not looking very good, and we have to be prepared for the potential of more weakness ahead. Even though in the near term, with futures up, maybe we get a little bit of a pop, I believe the path of least resistance remains to the downside. So keep your guard up. All right, earnings spotlight. So let's take a look at some of these companies that reported. I'm going to start off with Meta Platforms, Facebook. They came out, they beat earnings estimates, 272 versus 254. The stock after hours was up more than 18%. So it was back up above 200, but it's going to probably be dealing with these two moving averages tomorrow morning. So we'll see where it opens, but if it cannot open and or close, I'd like to see both above these moving averages. If we open above and then come back down and close below, that's not going to be a good look. But Meta Platforms at least is getting an initial positive reaction after beating earnings estimates. QUALCOMM up about 6 1/3%. QUALCOMM beat 321 versus 291. So we're looking at, I don't know, probably about maybe $7 or $8. So 142, 143. That'll take us up above the 20, but do we sustain that move to the upside? That's going to be the question there. PayPal, you know, kind of like Meta Platforms or Facebook. PayPal, I was very interested to see what kind of earnings they were going to come up with, because the market has not been treating PayPal very well. Pull up the chart here. You can see PayPal, which 10 months ago was over $300. Now it's at 82. PayPal's been a pretty strong company for a long time. This is kind of a shocking drop in PayPal. Their earnings were expected to be 88 cents. That's where they came in, 88 cents. So no beat. Stock, I think, probably getting a little bit of a relief rally, up nearly 4% in after hours. So it does look like maybe we'll see it move up, maybe $3, 85 and change. Maybe we get up to 86. Still got a lot of work to do on this chart. Does not look good to me here. ServiceNow had an 8% pop after hours. They beat $1.73 versus $1.69, but it's coming on the heels of breaking down below the January low, the AD line at a 52-week low. So it's nice to gap up, but can it continue to move up during the day? Or do we get a black candle or maybe even a red filled candle and go negative? I don't know, but at least at the start, it looks like we'll get off to a good start tomorrow morning on ServiceNow. Well, let's see a couple other key earnings reports here. Let's look at O'Reilly. O'Reilly down 7% in after hours. They did come up a little light on their earnings, 717 versus 743. Market didn't like that. But the stock down 7% after hours, which is probably close to $50. That's going to take the stock down to, let's just call it 663. That's going to be all the way down to this prior low below the 50-day moving average. This does not have a very good look to it. All right, so we had the big move up in Meta Platforms. Well, there are two stocks that had big drops after hours. The first, Align Technology. So Align was expected to come in with $2.24 profit. They came in $2.13, so 11 cents shy. Stock was already mired in a very, very lengthy downtrend. The relative weakness was horrible, and Align missed on its earnings, down 21.5% after hours. 21.5%. So that would probably be, I don't know, 70, 75 bucks. Looks like it's going to be a pretty rough morning for Align Technology tomorrow. The other big drop was Teladoc after hours. So Teladoc had earnings, well, had losses expected of 55 cents. They only lost 47. So at least from an earnings perspective, they came in a little bit better than expected. But the market did not like the overall action, and or at least the entire report. I'm trying to take a look to see what else, because I didn't see the revenues. So bear with me a second. I'll see if we can come up with something here. Stock's down 37% after hours. And look at the chart. I mean, Teladoc over the last year has just been a ski slope. And if you go back over the last 2 years, you can see Teladoc was a $300 stock 14 months ago. Now it's 55 and change, and after hours down another 20, 35 and change. I mean, that is just brutal from 300 to 35. I mean, we're talking almost 90% down in 14 months. Just looking to see if there was any other. Well, they did cut their earnings outlook, and they took a massive impairment charge. Let's see if I can come up with the what it cut. Just trying to get maybe a couple of details here for you. So there was $6.5 billion in goodwill that was written off. So that was part of it. Okay, so their full year outlook. They're looking now for revenues for the full year to come in $2.4 billion to $2.5 billion. The prior forecast was $2.55 to $2.65 billion. Adjusted earnings before interest, taxes, depreciation, and amortization, or better known as EBITDA, that is expected to come in in the 240 to 265 million range. Previously, it was expected that Teladoc would come in 330 million to 355 million. So that's a pretty substantial drop in expected earnings before interest, taxes, depreciation, and amortization. So not a good look there. Teladoc down, like I said, very significantly after hours. The last reading I see is 35.37, which is down nearly 37% from the 55.99 close. So it's going to be a rough start tomorrow for Teladoc. We'll see whether or not the stock recovers, but that is going to be, it's got a lot of ground now to make up, to get back up to the upside. All right, let's go ahead and wrap up now. We'll move into the 3 you must see. I'm going to go ahead and start off first with Helen of Troy. So Helen of Troy actually starting to change the character on its chart. It was clearly in a downtrend. You could see it fail at the 20-day, fail at the 20-day, put in a positive divergence right here, went up to the 50, got back to the center line, and then we went in, put in a new low. So it looked like it was rolling back over. And now with volume picking back up again, we came back up through. We're now trending above the 20, which is above the 50. And we took out this multiple top at about 210 to 212 in that area. So it looks to me like Helen of Troy is beginning to uptrend. I think as long as it stays above its 20-day moving average, I think we have a change of character on the chart. And it looks to me like we have an uptrending stock. Visa came out with its earnings, had a huge gap up. Like so many others, could not sustain it. It did still finish up 6.5%, so that's good. But it finished near the low of the day. So even though it went up, look at its AD line rolling back over again. And that on the heels of the last, well, 3 of the last 4 days closing on the low or very close to the low, just doesn't give this chart a very good look. I mean, if we could get up and get through about 228, 229, that would certainly help. But I think we're just going to continue to sideways consolidate here. And then the last one I have for you is Mastercard. Mastercard tried to make this breakout above 370. That would have been good, but it didn't make it. Like so many other stocks, reversing back down later in the day, failed to get that breakout, and now just continues to be mired in this fairly tight short-term trading range from about 340 up to about 370. So let's see where we close first. Can we get that breakout above 370, or do we get the breakdown below 340? I think that gives us the next clue as far as which direction it's likely heading. All right, that's it for me. I want to thank everybody for tuning in. I will be back next week for your next Trading Places Live over at earningsbeats.com. I want to wish everybody a great weekend. Be safe and be careful right now in the market. I think we have a much better market coming later this year, but in the short term, it's going to be dicey and we could see some lower prices ahead. So just be careful. Again, love to have you join us over at Earnings Beats for our EB Digest newsletter. Go over to Earnings Beats and make sure you scroll down and sign up there with your name and email address. Everybody have a great rest of your week. Enjoy your weekend. Be safe, and I'll see you next week. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new